Good afternoon or good morning, everybody, and welcome to another Fintech Nexus webinar. My name is Peter Renton, Chairman and co-founder of Fintech Nexus, and delighted to have two experts to go through a very, very important topic. Now, I don't think there's been any area of fintech that's had more innovation than the payment space over the last 2 to 3 years. There are more payment options than ever before and more coming online. And what that means is more opportunities for fraudsters to take advantage of some of these new technologies. So we wanted to get these two experts on to do a deep dive in transaction fraud detection. The way this is going to work, we have a presentation that is going to happen, and we're going to save questions to the end. Feel free to type in questions at any time. We're going to save them till the end, where I will come back and ask the questions that have come in. So with that, let's do some introductions. Amin, over to you.
Thanks, Peter. This is Amin Dhala. I am the global product lead for Brighteron, which is a MasterCard AI company. My team develops machine learning products from a fraud and risk perspective for issuers and the acceptance community. Specifically with respect to acquirers and PSPs, we're working with them globally to enable them more effectively mitigate fraud and help increase transaction approvals and improve the customer experience. So I look forward to our discussion today.
Okay, thank you. And Julie?
Great, thanks, Peter, and very much looking forward to this discussion. I am the Chief Insights Officer at Datos Insights. We're a global research and advisory firm. I'm fortunate to manage a team of experts that all of us came out of the banking and payment space. And now we spend our days talking to executives about what their top of mind challenges are and how they are leveraging technology, process, strategies to address them. So as we dive into this discussion here, and we've only got an hour and there's a lot to cover, but as you look at this challenge around kind of fraud detection in the payment space, we see that advancing transaction fraud detection is more important than ever because we are up against Fraud Inc. I like to say it's this lopsided chess game where the bad guys are getting 3 chess moves for every one that the good guys get. And so having the ability to leverage, our assets, our intelligence against them is more important than ever. Peter, if we go to the next slide, okay. We'll see that, and the next slide after that. Right. If you're sitting in this audience, you probably know that if you are on the business side or if you are on the fraud prevention side, both sides are united in the goal of avoiding a customer experience like this. You don't want your customer to be this frustrated as they're trying to transact, trying to interact in a banking session, trying to recover from falling for a phishing scam. It's timely given this discussion. Just 10 minutes before this call, I got a text from my dad saying he had fallen for a fish. And this is the dad of somebody who has spent multiple decades in the fraud prevention arena. So it just shows how easy it is for consumers to fall for these types of fraud attacks, these types of scams. And you don't want your customer to feel like this as they're trying to unwind any of this or trying to do a genuine transaction. If we look at the next slide, we do a lot of research endeavors. We do a lot of surveys of the financial services and merchant community to understand what are the pain points, what are the successful solutions. Early this year, we surveyed financial institutions in the US, UK, Canada, Brazil, and India to understand what's going on with faster payment rails. And one of the challenges with this organized crime entity, multiple entities that constitute Fraud Inc., is that they're coming at us on so many fronts. They're coming at us across the banking rails. They're coming at us across faster payment rails. They're coming at us across card not present rails. And we have to be very good on all of these fronts, whereas they can just continue to send this barrage of activity against us, hoping some of it slips through the cracks. The bad guys don't have to make business cases to advance their attack vectors, whereas unfortunately we're constrained by a lot of that on the side of the good guys. As you can see from this chart, the organized crime rings love faster payments. Faster payments truly does equate to faster fraud for these crime rings, and it's ATO, it's scams, going after the weakest link in the chain. And then as you successfully compromise the consumer or the banking site or the e-commerce site, then you need to have a very robust set of mule networks to help you exit those funds from the system. And as you can see here, as we look at kind of the year-over-year trend based on attack volume, the mule activity using faster payment rails is up, 25% or more for 38% of the financial institutions we surveyed. And that was one of the kind of aha moments in this study for me. That's a massive increase in just a year. Consumer ATO using those real-time payment rails was up 25% or more for a third of the financial institutions. So it just kind of underscores the intensity of the attack vectors that are coming against financial institutions, issuers, and everybody in the payments ecosystem. If we look at the next slide, we'll see that consumers are making it all too easy for the fraudsters. So the results that you're seeing on this slide are the results of a survey that we do every couple of years, surveying consumers across a variety of geos to understand, as they're accessing their financial institution account, as they're accessing their e-commerce account, what authentication mechanism do they most prefer to use? Unfortunately, consumers, especially in the US and the UK, still remain woefully attached to the username password, which makes it super easy for criminals. We all know that the vast majority of our static data is compromised. It's for sale on the dark web, and username password is chief among these. The one little couple of glimmers of hope that I saw in this particular data set was, as you look longitudinally and you look back over some of the prior year surveys that we've done, we have seen that fingerprint biometrics and facial recognition have grown in preference among consumers. As we sliced this data for demographics, younger generations, the Gen Zs, the younger millennials, the older millennials, have a strong preference for biometrics versus username passwords. Where you see the heavy weighting towards username passwords, especially in the US market, is that we still see that the older demographics, the seniors and the older boomers, they have a strong preference for username password. The other distressing piece of this survey for me, and this has been the case every year that we've done it, is that as we ask the corollary question to consumers, okay, you prefer this, you think it's easier, username passwords, you think it's easier because you're misusing it, you're using the same username password across the majority of your online relationships, but how secure do you think that these various authenticators are? And across all geos, as we asked this question last year, every single demographic believed that username password is still secure, which is, again, why consumers are making it easy for these organized crime rings, because they have this false sense of security when it comes to some of the most common but most susceptible authenticators. If we look at the next slide, Peter, we are also, again, we're fighting crime on multiple fronts. The scampocalypse, as one of my colleagues very aptly coined it, is something that is top of mind for every financial institution across every geo that we deal with. The organized crime rings have realized that the consumer is absolutely the weakest link in the chain, and they are heavily targeting them with a wide variety of scams that are inducing the consumer to send authorized push payments directly to the fraudsters. The scampocalypse is so challenging because over the past 20 years, financial institutions and merchants have designed their fraud controls to detect unauthorized activity on accounts. Flipping that equation and trying to figure out the intent behind a particular transaction and detecting that an authorized activity made by the genuine customer was something that was induced by a fraudster, really hard to do. And that's why, as we surveyed consumers and asked them about their confidence in their scam control framework, only 1 in 4 across the 5 geos actually think that they have a sufficient detection framework today. If we move to the next slide, again, looking at the multiple fronts that we're fighting Fraud Inc. on, card not present fraud continues to be one of the fraudsters' favorites. So, as we did this incredibly successful shift across the globe to chip-based card payments over the past couple decades, we've seen that we have very successfully taken billions and billions of dollars of counterfeit fraud out of the coffers of Fraud Inc. But this is a for-profit business. They are not content to take this hit to their P&L. And so as we have seen this shift to chip cards across the globe, we have also seen Fraud Inc. shift their tactics and focus on other areas where they can backfill those counterfeit card losses and even increase their fraud attacks. Card not present has been one of the key points of attack across all of the geos as we have made this switch over the decades. And as you can see from the stats in the US market, we are seeing that we continue just this steady pace of increases in card not present fraud losses. Part of this is driven by the denominator of card not present fraud in general. And so today, by the end of 2023, we're going to see around 88 basis points of losses associated with card not present in the US. The other factor that is driving the increasing hockey stick in markets like the US that don't have a regulated mandate for strong customer authentication is, as you do have Europe, which now has a strong customer authentication mandate, Australia has one pending. It's going to be very similar to the dynamic we saw around chip cards, where the organized crime rings will focus on those target geos that represent the weakest link in the authentication chain. And that'll be any non-regulated market that isn't requiring 3D Secure. Even with this increasing trajectory of fraud, we do see that false declines, as my team talks to large merchants, are often more concerning than the fraud. The decline of a good consumer that is trying to make that e-commerce transaction is something that keeps most of the merchant fraud executives up at night every bit as much as these rising fraud losses. If we look at the next slide, this is substantiated in just the increase in the number of total transactions decline due to suspicion of fraud over the past couple of years. As you can see from this graphic, but this is actually very recent data. You are the first audience that will see this data. We just pulled it out of the field. But we are seeing that across both the US and the UK, that a number of merchants, more than a quarter, have seen false declines or fraud declines increase more than 5% over the past 2 years. And Amin, I know you're on the front lines of this, and I'm curious your reaction to this data.
No, that's very similar, Julie, to what we are hearing from the acceptance community across geos. Definitely, there's been an increase in fraud. At the same point of time, also there is the impact on the customer experience, which you're alluding to. So these are definitely areas of concern where acquirers do come and tell us that hey, there's room for improvement, and they're trying to figure out as to what tools they could leverage in that regard.
Absolutely. Peter, if we move to the next slide. And you touched on this, Peter, in your opening. The other thing that makes all of this so complex for merchants is just that there is an increasing variety of payment acceptance mechanisms. And the consumer expects the e-commerce merchant to meet them where the consumer wants to be. So if the consumer wants to pay using Klarna or Afterpay or Alipay or Samsung Pay, that's what they want to see the merchant support. And so as you look at just this wide variety in this chart of the various ways in which consumers can make the payment to the merchant, that vastly increases the complexity of the fraud fighting, because there are, especially as you compare buy now, pay later versus direct debit versus payment cards, there's different points of compromise that the fraudsters can weave their way into. And then as you look at the dispute mechanisms on the back end, that also brings an incredible amount of complexity, especially in the US market, where you have multiple debit networks, and each one of those has slightly different dispute mechanisms versus each other, also versus cards or credit cards. So all of this complexity also makes it, one of the reasons why payment fraud executives, especially e-commerce fraud executives, are waking up at 2 a.m., worrying about the business and the ways that the fraudsters are going to compromise them next. As we look at the next slide, the other challenge, and this goes back to that false decline rate, is that we still have just a big gap in terms of the authorization approval rate for e-commerce orders. If you look at the weighted average of the CNP authorization rate, right now it's around 89%. The bit of good news I found in this data as we pulled it out of the field a few weeks ago is this does represent an increase versus when we did this same study a couple of years ago. So, we're seeing the needle move up, but as you look at the fact that the average card authorization rate for card present is over 98%, that still says that we've got a lot of false declines happening out there. We've got a lot of revenue leakage happening for e-commerce merchants, and conversely on the issuer side, we've got some bad customer experiences when their customers are getting declined needlessly. So there's still a gap there that we need to close. If we go to the next slide, Peter. And this really speaks to the fact that as we survey e-commerce merchants, and we get very similar results when we ask the equivalent question on the issuer side, as we ask them about, as you're making your business case to evolve your fraud control framework, what are the key factors that can drive a successful business case across the finish line? And as you look at this chart, 38.5% say that their priority is to minimize fraud losses. And now that makes sense given we're asking fraud executives at e-commerce merchants these questions. But I think it's equally telling that over 60% of these e-commerce fraud executives are saying that it is more about the customer experience side of things that are driving these investments. It's things like minimizing false declines, minimizing user friction, maximizing sales, striking that optimal balance. So it really speaks to the importance of deploying controls that can help you walk that tightrope between customer experience and effective fraud prevention. And nobody feels like they have this nailed, I don't think. It's definitely a tightrope walk that continues to progress. Moving to the next slide. The other challenge, so we've been talking a lot about Fraud Inc. and a lot of the third-party fraud that they bring against us using compromised data, stolen data, compromised credentials. First-party fraud is another massive pain point for both the merchants and the issuers that my team is talking to on a daily basis. 2/3 of the merchants that we surveyed this year are seeing rising levels of first-party fraud. As you get into specific subsets of e-commerce, for the digital goods merchants, and this is a consistent data point that I've seen over many years, 75% of all of CNP fraud is first-party fraud for those digital goods merchants. It's Johnny racking up $400 worth of online, you name it, game, credits, and then the mom seeing it at the end of the month and saying, I have no idea what this is, and charging it back. It's statement confusion, where you see the just random bit of gibberish that comes across on your statements, and you have no idea what this is. And instead of calling the merchant, the consumer often just charges it back. And there's also a lot of opportunistic first-party fraud. Typically in times of economic, upturns and downturns, we see that during recession, first-party fraud increases. During recovery, first-party fraud abates. After the Great Recession, we did not see first-party fraud abate. We saw it plateau, and it started growing again as we entered the soft economic period that we're currently in. There's YouTube videos out there that coach people how to perpetrate first-party fraud, and coach people the fact that there often are very little in the way of consequences for first-party fraud. So this really speaks to one of the many drivers that we're seeing behind this steady rise of first-party fraud, which again, we hear that this is incredibly painful, both from our merchant and our issuer clients. If we go to the next slide, I think the key takeaway from all of this data is that there is still just immense room for improvement in that intersection between customer experience, fraud prevention, and optimizing the number of good customers that merchants, banks can get through their various funnels. If we go to slide 14, Peter, we do see that change is in the air. So as we ask financial institutions, and in this case, it's specifically around making enhancements to real-time payment rails, there's 67%, 2/3 of the institutions that we surveyed are going to be making major changes to these over the next couple of years. But I can also say we have a similar CNP study that we're about to pull out of the market right now, and we'll publish next month. We see something very similar there as well, that there's a lot of appetite to invest in the latest and greatest technology that can help you thread that needle of fraud prevention as well as customer experience. And as we'll see on the next slide, collaboration is a key opportunity here. We're all up against Fraud Inc. on this front. They are not coming against any one of us in isolation, and especially in the CNP space, where it's like a big puzzle that the merchants hold one half of the puzzle pieces, the issuers hold the other half of the puzzle pieces. So if we can get better about bringing together our collective insights into the customer, the transaction, and bring all of those puzzle pieces together, we can create much better outcomes for all parties involved. So with that, I'm going to pass the baton to Amin, and he will take us through the next part of the conversation.
Yeah, thanks, Julie, for that background and some of the research trends which you are seeing, across several critical geos globally. And in terms of our discussions with the acceptance community, we see fairly similar trends. Firstly, there is the Fraud Inc. component, which which Julie spoke about. There's increasingly they have access to global tools. They have access to global resources as well. So these are fairly well established, kind of groups or organizations at play. So there is this changing fraud landscape. Apart from that, what we are seeing is that when we speak to the acceptance community is beyond the loss for that given transaction, or even the customer lifetime value, which we're alluding to. There is the whole aspect of how do they actually protect the brand perception, and how do they enhance the trust which the financial institutions have with their customers. So that's core aspect or part of the ecosystem out here. There is also the whole component of rapidly emerging regulation. So as digitization has happened, fraud has moved online. You saw that in the CNP losses, which Julie you showed, and you find that regulation is being introduced or being modified in order to help address this particular need. So there's that at play. But apart from that, there's also we find that acquirers also looking at their own fraud management discipline, their own fraud management processes, having their own metrics and processes and policies in place, which they are looking to meet. And in order to meet that, they also need tools to which can help them address even their own internal needs. But the crux of it all really comes down to the most important tenet, which is how do you actually balance user experience versus security. So it's all about how do you increase revenue, how do you actually increase transaction approvals, most importantly, how do you improve the customer experience, and by the way, how do you actually mitigate fraud in that particular context. So that's roughly what we are hearing in our discussions with acquirers, with payment service providers globally. And Julie, wanted to check in and see if you had any other thoughts on what we just spoke about.
No, I think you're spot on, and I think calling out regulation is a really important concept there, because that is also a key driver. It's that's something that can instantly make your business case for you, because you have no choice. And we're seeing that emerge on the strong customer authentication front, as I mentioned during my comments, as well as on the scams front.
Yeah, absolutely. I think that that is an increasingly a vector which is playing a role in terms of how acquirers or PSPs are looking at the entire customer experience, and it molds that straight up. So if you go on to the next slide, Peter. So I think as we looked at the whole context and the landscape based on our discussions, and also what we've been seeing through research, which Julie alluded to. What we looked at is, hey, there is this aspect of growing approval rates, improving customer experience. There is the enormity of increased amount of data in the dark web in terms of stolen cards, etc. And so that's the context you're working with. And if you look at the core needs of acquirers and PSPs for a transaction fraud monitoring solution for that segment, a solution has got to be, there's some core tenets. One is you got to be real time, you got to be pre-authorization, and you got to be brand agnostic. So we looked at these core tenets and included as we looked at developing our own solution here at Brighteon Mastercard. So the resultant of that is that as an acquirer, you can actually make a call to us pre-authorization to our machine learning models, which are built off network intelligence based on the data which we are seeing as a network, including the fraud data which is being reported to Mastercard. We then give a score back, let's say on a range of 0 to 1,000, indicating the likelihood that that transaction is a fraudulent transaction, and a reason code which explains why we have scored a transaction the way we did. So that's the construct of our transaction fraud monitoring solution. Effectively, one would ask, hey, there are several other solutions out here in the market. So, so what really is the core outcome out here? And effectively, it all comes down to, hey, from a fraud, let's look at both sides of the continuum. In terms of fraud detection, at review rates of roughly about a percent, be able to identify up to 35% incremental fraud detection. Now, this 35% is over and above whatever existing fraud mechanisms are there in the ecosystem. So whatever you may be using in terms of rules, or in terms of advanced models, or in terms of an AI. So that is the incremental fraud detection which you're able to identify. And as you can imagine, if you actually then place that against your P&L, that is a significant uplift which you're bringing in terms of profitability. Because the solution is brand agnostic, if you then extrapolate across your network of card transaction, that becomes a significant savings which you can actually bring to the whole to your business. Now, that's on one side of the continuum. On the other side of the continuum, in terms of we're able to reduce false declines and false positives and increase approval rates. And as a result of that, there is the enhancement in customer experience and increase in the customer lifetime value. So there's significant amount of benefits in terms which you're able to bring to life. And this is something which we see across geographies. These numbers hold good, be it in North America, or let's say Europe, or even like Asia or the Middle East or Latin America. So if moving on to the next slide, if you can just know that, Peter, thank you. Let's talk a little bit about how we actually able to deliver that kind of performance, right? What are the guts of the solution as such? So effectively, Brighterion actually enables, has been enabling, Mastercard's, machine learning capabilities from a fraud perspective on the issuing side, as well as on the broad ecosystem perspective for over a decade right now. And therefore, we have experience and expertise in terms of really scoring over 100 billion transactions. We provide a transaction fraud score to issuers for every transaction, who then can take that into their consideration as they decision upon a transaction. So that is the expertise which we already have in play on the issuing side. And we are now bringing this to the acquiring side of the house. So you can actually leverage that network intelligence. These are customized models which are built for the acquiring community based on the data we see at that point of time in the transaction. And it is actually pre-auth and brand agnostic. Again, as you can imagine, our solutions are well placed in terms of being interoperable. As you can imagine, any transaction fraud solutions got to be interoperable, work alongside other capabilities such as, for example, loyalty or be it installment payments, different types of payment capabilities, which you were alluding to in terms of fragmentation, which is happening. So our solutions are interoperable and work across the continuum of payment methods. So if you distill it down in terms of some of the core components or the differentiators, there's some 3 or 4 which come to mind. First of all, we have a smart agent AI technology, which really helps us build highly personalized profiles for any given account or any given transaction at that point of time. So this really helps us deliver on that exceptional modeling accuracy. The second aspect is that we have over the last couple of decades, as Brighterion, honed our machine learning technologies and come up with capabilities with a stack which really helps us deliver or develop models in a short span of 6 to 8 weeks. Alongside that, what has also happened is that we, obviously, as we've actually interacted with transaction data sets at the scale of what we see as Mastercard, like 100 billion transactions every year. So there's a lot of expertise which we're able to derive in terms of high transaction data sets. In terms of the feature engineering, which our teams, modeling and data science teams, look at. There's another aspect in terms of like, hey, you can actually build the models, in a lab or a kind of environment, but it's extremely crucial to actually then deploy these models at scale, so that you can actually realize the benefits of these models on an ongoing basis, and that's the expertise which we've done, which we experience even for any transaction. Let's say, Peter, you make at a Starbucks in Manhattan, or entering into the subway out there. So that's that, being able to do that, on premise or in the cloud, based on what an acquirer's needs are, and they have their own, based on whatever the data localization requirements may be there in a given country, and doing it real time. And lastly, there is the whole aspect of data governance and in terms of explainability, which is very crucial, because if a customer's transaction is declined, you want to understand why the transaction is declined. So this helps you provide that explainability, and that's the expertise which and the differentiator which we actually bring into the as part of our solution. So as we move on to, Peter, if you can move on to the next slide. So, so how do we actually go about kind of building up this solution, and just to walk you through our life cycle, we are building our models based on the fraud and based on transaction data which we see as MasterCard, based on the fraud and loss data which has been reported. And so, as you can imagine, we are basically understanding the trends which fraudsters are using, which have been previously been successful in escaping the ecosystem and have resulted in fraud. So we are able to learn from those trends on an ongoing basis and use that to train our models, and hence our models are able to pick up those techniques on an ongoing basis. So that's the training which we do on an ongoing basis, which really helps us deliver on that modeling accuracy and the room for improvement, which Julie spoke about as well, and help deliver on that which our acceptance community is looking for. Now, once the models have been built, the data is available. These are then trained by Brighter AI, which is leveraging the smart agent AI technology which you spoke about, and the other aspects of just deriving intelligence using sophisticated feature engineering techniques. We are then able to apply this on any card transaction, brand agnostic, and also non-card transactions as well. And then the solution can be cloud hosted or on-prem. And what we see is our customers sometimes use a solution by itself, or they may use this in combination with their existing scores, which they may have from their solutions or the rules, depending on where they are in terms of their fraud decisioning tools continuum. But core is the scores have got to be real time. There's no obviously giving up on that. And then basically, based on the scores we provide, our partners tend to then use that as part of decisioning, progress with the transaction, maybe step up customers alongside some of the aspects of strong customer authentication, as you alluded to, Julie, or the like. So that's basically how the solution kind of rides the rails, and that's how we actually gone upon building it, so that you can actually benefit from MasterCard Network Intelligence wherever in the globe, irrespective of the regions, because we have that data which we have access to, which are used to train our models globally. So, in terms of looking at our platform, we provide a modular end-to-end platform which to the acceptance community in terms of 5 core modules which you can pick and choose from. So let me walk you through those. First of all, there is the modeling toolkit, which I just spoke about, and it has components of supervised and unsupervised learning, which we use to train our models. And this is what becomes the foundation of our market models, which provide that network, global network intelligence. So that's the modeling toolkit. Second, we have a rules module, and this is pretty much state of the art. You can pretty much build up models of any given variable. It's multi-tenanted, so if you're an acquirer or on a processor side, you can basically enable rules for your tenants as you deem appropriate, or also manage rules for them as well. And it's got state-of-the-art UI. You can actually then deploy this on-premise or in the cloud, and we have there is if you're looking for faster go-to-market, then you would actually looking at cloud. If there's more data considerations, then you would probably look at the on-premise solutions. There is then the component of investigate or case management. So based on alerts which are generated based off exceptions to the modeling scores or to the rules, we have a full-fledged case management modules which your fraud ops team could then leverage. And then lastly, we have a insights module which provides drag and drop capabilities. Fraud management teams have their favorite views. We all do, and this is another module which is available as well. So you pretty much pick and choose which of the modules you want to leverage. So just walking through some details of each of these modules. We'll start off with rules. Sweet, if you can move on to the next slide. So this is where basically you are able to set up rules on any given data element or a combination of data elements. You could set up, aggregated rules. So it's a range of capabilities which are available. And once you've actually authored the rules, you could actually go ahead and test the rules in a sandbox environment before you actually move it to prod. So there's a great ability to actually test it against historical data so that you can actually be pretty comfortable with the rules which you're going to push to production. And then once you actually, there's also rules performance reporting. So you exactly know, how your rules are performing, like how did it, what is the incidence of occurrence or the rate of trigger across, transactions in prod. And you can also look at, what is the, the true and false positives which resulted on the basis of, the rules which are being set up. So a lot of core capabilities available here. Now, once the rules module is set up, then we get onto the case management module. This is where you look at triggers based on which are being created based on the rules which is set up on the AI model. And this is where we provide a range of capabilities from a case management perspective in terms of user groups, in terms of manual automated creation of alerts, and of course the components of reporting and auditing, which is core. So again, it's a pretty user-friendly module with a refreshed UI, which you can actually, which product team would find easy to work through. And the core aspect out here is, as part of our experience with Brighteon, we've also had over a decade's experience in terms of working with acquirers and payment service providers and in building out user interfaces which have streamlined flows. So that's something which your fraud ops team could benefit from. So move on to the next module, which is the business intelligence module. So this is where your fraud management team would actually benefit in terms of some self-serve analytics to pretty much drag, drop, create views on the go. So that's something which is enabled. And apart from that, we also have standardized reporting in terms of some standardized reports that you may want to set up. Or if you're an acquirer processor or your processor, you want to set up reports which you can then make available across your breadth of institutions. That's something which is available as well. There's also the ability to set up, exception-based alerts so that we have actionable intelligence. So range of capabilities, pretty much the sky's the limit. So you pretty much could actually have your own insights which are made available to drive your decisioning and your fraud strategies. So hopefully this gives a good view in terms of all the different modules and which you could actually leverage. So let's talk a little bit about some customers who are actually making use of a solution. So in this particular case, we're working with an acquirer in Latin America and was looking at a solution which is pre-auth, real-time. Our model is able to detect an incremental 8 to 10% incremental fraud detection without any impact, with hardly any impact on the transaction approval rate. So straight up, they were able to save in tens of millions of real out there. And again, the score was real-time, pre-auth, fused alongside, in addition, and all this was on top of the existing AI models which are there in place. And we're also making use of our other modules in terms of rules and case management as well. So some real life examples of how the solution is being leveraged. But let's talk a little bit about more broader usage as well. And as we are working with, Peter, if you can move on to the next slide, we are working with acquirers, payment service providers globally. There's a range of marquee names out here of partners we are working with. And as you can see, they are spread out across the globe in every region, North America, Latin America, Middle East, Asia, and Europe. So across different regions. Also, we are also working with acquirers who are recently established as well. So of course, you're seeing some marquee names and partners here. but we're also working with finance institutions or PSPs who are recently getting started, because the benefit of these market models and network intelligence is that you get that ROI right from day one, because you're training the models based on MasterCard network intelligence. So there's that particular aspect. The other component is also you're benefiting from our platform, our different modules, which are highly mature and which process close to 50 billion transactions directly for acquirers, which we actually do. So you're actually benefiting from that expertise and that the maturity of the platform which we bring across. And it's a platform which is mature and yet agile, because we're constantly investing in it as MasterCard. We'll move on to the next slide. So just talk a little bit about, so you may ask, how can you actually take this to how can you benefit from this? And basically there are two phases. One is in terms of model development, leveraging network intelligence, and the second one is deployment. So if you think about, if you had to actually go ahead and build a model by yourself, you kind of face challenges such as data extraction, in terms of just having access to aspects such as confirmed fraud. These are real life challenges which one faces when you actually go ahead and building your own model. So you're actually straight up in phase one, you're benefiting from this model which is available off the shelf, and you can use it by itself, or you fuse it alongside your existing scores from your model, and you're off to get started, right from day one, generating ROI. So all that you need to do is you actually just need to go ahead, take our APIs and integrate with it, and you can deploy this on-prem or in the cloud. We're available across cloud service partners, across all the regions, and you pretty much integrate with this API, get the scores, and you would go about testing it in Sandbox and then take it live. So it's pretty much just a focus in terms of deployment, phase two, and integrating with the APIs. So it's and we've done the heavy lifting of building the models and having these off-the-shelf models. So getting on to okay, fine. So as you diving into a little bit more detail out there, so you would actually go ahead and confirm the use cases, integrate with the APIs, you call the APIs, which we have for transaction fraud monitoring, get a score back along with the reason code. And post that, you may optionally choose to send us, a confirmed fraud data. But pretty much it's a very straightforward integration where you go ahead and integrate with the APIs, you get the scores back, and then integrate that into your entire workflow. But it's as we looked upon building upon this solution, we looked as to how we could actually streamline the whole experience. So moving on to, so as you can see, hopefully you've gotten a feel for the transaction fraud monitoring solution, which we have for acquirers and payment service providers from Brighterion. How it works, what its impact can be globally, wherever you are in the globe. And we are happy to provide more information or discuss how we can support you in your journey of providing a enhanced customer experience of growing your revenue at the same point of time of mitigating fraud. So feel free to contact us. So with that, Peter, I'll hand it over to you to take this forward.
Okay, thank you very much, Amin and Julie. That was really fascinating. Now, we got some questions coming in here, but before I get to them, well, actually, the first question really is about the deck. The slide deck is not going to be made available, but obviously the recording is available. You're able to view all the slides on the recording. That will be available on demand. Everyone who is on the webinar or who is registered will be receiving an email with a link to that. So, okay, first question here. Amin, how effective are your models for banks which already use artificial intelligence?
Yeah, I think that's a very good question. If you look at the ecosystem, they obviously have a range of tools which they use along the continuum, be it in terms of rules, analytical models, or AI. And what we've seen is that there's an incremental up to 35% of fraud detection, which we're able to deliver with very minimal impact on the customer experience. And it's it's something which is driven by our more accurate models which we're able to build, and also be able to realize it because we're able to deploy these models at scale as well. I mean, like I spoke about, there's roughly about a 50 billion transaction which we score directly for acquirers. So scale is not an issue as well. So as you're looking at, I would say that as you're looking at incremental benefit, a partner should also look at, hey, can that benefit actually scale from, let's say, a POC kind of an environment to real production.
Okay. Looks like one for Julie. What successful strategies are you seeing issuers and merchants use to address first-party fraud?
Well, that's the million-dollar question right there, or the multi-million-dollar question. Yeah, I would say that modeling is certainly part of it. So modeling behavior, yeah, if you can get it down to the segment of one level, that would be ideal, both on the issuer and the merchant side. Looking for kind of those anomalous behavior patterns that do seem to be indicative of first-party fraud over time. I would say data sharing is another key opportunity. So, leveraging platforms like MasterCard's Ethica to facilitate the sharing of data about the transaction amongst merchants and issuers, and then creating consequences. So one of the reasons why first-party fraud is rampant right now is because you have all these YouTube videos out there that are teaching consumers that you can do this without any consequences for a good long period of time. And I do see some of the more sophisticated issuers and merchants, tracking this kind of behavior, tracking the anomalous chargebacks, tracking the anomalous disputes. And then if you do have an abusive consumer, showing them their way to the door at some point.
Okay, another one looks like for you. I mean, does Brighterion only work with MasterCard or Visa as well?
Yes, so we do support any transaction of any card scheme. So we are brand agnostic. Also like to add that we also support account-to-account payments as well. So it's both sets of the house. Yeah.
Okay. Another one. What sorts of enhancements are FIs planning in order to evolve their real-time payment control frameworks? Who wants to take that one?
I can take a first stab, and Amin, feel free to chime in if I miss anything here. But I think that the first step does go back to analytics, and it's looking again, similar to first-party fraud. It's looking for those anomalous consumer behaviors, be it authorized or unauthorized fraud. Looking for those that new payee where you're sending $10,000 and it's a dormant account that hasn't been active for X period of time. And it's both on the send side, looking for those anomalous payments, and also very much on the receive side, especially as we're seeing a number of markets. It's going into effect in the UK in 2024, where there's going to be shared liability amongst the sending and receiving banks for scam-based fraud attack vectors. You often have a better opportunity on the receiving side to detect the mule accounts that tend to exhibit highly anomalous behaviors just because it's their mule accounts. So I think analytics are really kind of the first line of defense on both sides of the equation.
Yeah, I would add that, Julie, that you're right that even as far as you're concerned, the segment of one which you're referencing, those are capabilities which can come to the fore in helping you kind of help mitigate fraud both from the sender and receiver side as well. So yeah.
Okay. What is Brighteron's average time to deployment?
Yeah, so as we looked at developing our transaction fraud solutions, we look closely as to how we can just make it really simple for acquirers and PSPs to leverage a solution. So it takes roughly about all you need to do is like integrate with the APIs, as we kind of had discussed. So it takes roughly about 4 to 8 weeks. And that includes integrating with the API, running in Sandbox, optionally making use of any of the modules we spoke about, but it's pretty straightforward implementation, and we've seen partners of across scale kind of integrate with it fairly easily.
Okay, well, that's all we have time for. I'm sorry if we couldn't get to your questions, but I want to give a big thank you to Amin and Julie. Appreciate your time today. Thanks, of course, to Brighterion for sponsoring this session. And most of all, thank you to the audience for watching and for your questions. Have a great afternoon, everybody. Thanks a lot.